do some insurance work for the corporate office at LifeSpire. Today, I'm here to talk specifically about long-term care insurance. So what is long-term care insurance? And it's an insurance policy that you would have bought that helps cover the cost of your long-term care. And it's generally for people with chronic conditions, cognitive impairments, or disabilities. And this would have been something that you bought probably 10, 20, maybe even 30 years ago, depending on how old you are. The optimal age to buy long-term care insurance is between 60 and 65, and that's assuming that you're in good health and that you're still eligible. So you do have to meet an eligibility requirement with the insurance company. The factors that affect the cost of the policy itself are things like your age, your gender, how long, if you're married and how long you've been married, your overall health condition, whether or not you use tobacco, the level of coverage that you were looking for, and also the insurance company itself. So this right here is a snapshot, and it's a few years old, but how much long-term care costs. So there's a couple different examples, one being homemaker services, and that's when someone comes into your home a couple times a week. In this instance, it's 44 hours, but they help you do things like laundry, cleaning, general care of your environment and yourself. Then you would have a home health aide, and that's when someone like a companion would come into your house and they would help you do things like take a bath or get dressed. And then some of the above things I mentioned earlier, such as helping with your laundry and general housekeeping. Then you have adult daycare, which is where you would go somewhere and stay the day, and that's generally $16.90 a month. Assisted living, and this is a little misleading because it's not compared to assisted living like what you think in a CCRC, which is what the Chesapeake is. This is a dedicated assisted living facility only, and that runs about $4,500 a month. And then you have your nursing home in a semi-private room. So you'd be sharing a room with someone, and that runs about $8,000 a month. And then lastly is your nursing home. So this would be comparable to the healthcare center that we have here, and that would run you about $9,000 a month for a private room. Oh, this is not in order. So how do you qualify to use your benefits? Activities of daily living, or ADLs, are what the insurance company uses to determine whether or not you're eligible to enact your policy and collect your benefits. Typically, you must need help with 2 of these ADLs. Some policies require 3, but that would be listed in your policy benefits. The ADLs are bathing, eating, dressing, transferring, toileting, continence, and then some policies also have that cognitive impairment. So that would be an additional one, and it would be specified in your policy. So in order for you to use your policy, you need to have help with 2, maybe 3, depending on your specific policy, of these items. And help with these are things like standby assist, where maybe you can take a shower by yourself, but you need someone there to make sure that you're not going to fall, or just to help you get cleaned up. And then you also have hands-on, which means the person's actually helping you perform that activity. So with eating, they would actually be feeding you. So once you have 2 of these, you would qualify to use your policy. Now what do? So the first thing you would want to do would be to contact the company and open a claim. And there's a couple different ways that you can open a claim depending on the insurance company. So first, you can call them, you can tell them you would like to open a claim. some of the companies will take all of the information over the phone, fill it out, send you a packet. You would have to sign the packet and send it back to them. So that's the first way. Another option would be for them to mail you that packet. Again, you'd fill everything out, send it back to them, and they would open the claim. And finally, a lot of the companies now have a website portal, so you can go directly to their website, click on Open a Claim, and fill out all the paperwork that you would need to complete. At the end of any of these processes, you're going to get a claim or a case number. And this is an important number that you want to hold on to because it will reference that phone call and all of the information you provided from that point moving forward for anything that happens with your policy. The next step would be to have a records request. So in that paperwork that you filled out, you've given them permission to reach out to your medical provider and provide any documentation related to your current health condition and your current care needs. So they will reach out to your doctor. If you use Dr. Haji here, they would reach out to us, and we would provide those medical records for them to assess your condition. Some policies also will send someone out to your home to do an evaluation. So they would make an appointment, send a nurse to your house, they would evaluate your medical condition, and then they would turn that information back into the insurance company, and then the insurance company would then follow up with you. The next piece, once you've qualified, is you must meet an elimination period. Now this varies from policy to policy. So this is the amount of time that you must have and pay for care out of pocket before the insurance company will start to reimburse you for your care. This can go anywhere from no elimination period, meaning they start paying as soon as your claim is approved, all the way up to, I've seen up to 180 days. So again, that's in your policy rider, and it would be specified. How can you meet your elimination period? There's a couple different ways that you can do this. And so you want to be communicating to the community and to see what's going on and maybe what your level of care is and your transition. So for instance, if you're currently living in independent living and you're planning to move to assisted living in the near future, if your policy will allow you to use your home care companion services to meet your elimination period, that, especially if you have a fee-for-service contract, which most people that have long-term care insurance opted for that type of contract, you can start to receive home care services at your apartment and pay for those services, which is a lot less than it's going to cost when you move to that higher level of care with a fee-for-service contract. So for instance, currently the rate is $33 a month. Well, if you have, or $33 an hour, if you have somebody come in 1 hour a day, every day, those 7 days will count towards your elimination period, and you'll be paying the $33 a day versus whatever your monthly service fee is in that higher level of care. You can use this to meet your elimination period, and then once you go to that higher level of care, you will have already met at least a portion of your elimination period, and then the clock will pick up in that assisted living. And so if you've met, say, 30 days of a 60-day elimination period in independent living, you would start on day 31 when you transition to that higher level of care. The other way you can meet is if you have an incident or accident. And this part tends to get confusing because when people talk about being in healthcare, they talk about a skilled stay. So the healthcare facility here is a skilled nursing facility. You receive skilled nursing care when you are there. Now, the difference being who's paying for that care. So say, for instance, you had an accident and you have your 3-night hospitalization that's required by Medicare, and you end up in the healthcare center. Medicare is paying for that stay. A lot of the insurance companies will recognize that as meeting your elimination period. So if, for instance, you're in healthcare, you've been there 30 days, and you have a 30-day elimination period, you would turn in that paperwork for the Medicare skilled stay, and you will have met your elimination period. Services that the long-term care insurance may cover. So things such as personal care, and this gets into the ADLs, the activities of daily living. So the bathing, dressing, eating, taking your medications, toileting. Some policies do cover the homemaker services. Custodial care, which is similar to home care companion. So that's when a non-licensed professional will come in, or personal will come into your house, such as a nurse's aide, and assist you. Or skilled care, which would be under the supervision of a professional. And that would be in more of your traditional nursing home or healthcare unit type care. And then finally, home and community care. Again, this mimics the home care companion services where someone's coming in from outside and helping you in your home. And even though you live within a retirement community, when you're an independent living resident, you're considered a member of the community at large as far as the long-term care insurance companies go. So they're looking that as you're living in your permanent residence, even though you live in a retirement community, and you can have someone come in and help. What long-term care insurance is not? It's not health insurance. It doesn't replace your Medicare benefits, your supplemental insurance, your Medicare Advantage plans. All of that is related to your health care. This is related to your long-term care. And then it's not a skilled nursing stay or a Medicare stay. So while you can use that skilled stay to meet your elimination period, your long-term care insurance is not covering that stay. It only addresses your long-term care needs, so someone to help take care of you. How much does my long-term care insurance cover? That is policy dependent, and it would be listed in your premium paperwork that you received when you signed up. You should receive an annual notification. A lot of the policies have an inflation rider, so each year that benefit will increase. I know a lot of you have come and seen me with a letter where you've bought a fantastic policy and they now want to pay you a bunch of money to lower your benefits. So you want to, when you get paperwork like that, to really look at what they're offering and what you're changing to and whether or not it makes sense for you in your current situation. The home care companion services, it's generally a weekly benefit, so most policies cover somewhere around $1,300 a week. And then for the assisted living or the health care, they have a per day rate based on the policy. So I've seen some policies have anywhere from $120 a day all the way up to $450 a day. It really depends on the policy and what you bought when you got it. And I'm gonna stop here for a minute because I've talked about a lot of things. Does anyone have any questions about anything I've talked about so far? Yes.
If there's two of you living,
Yes.
and one departs and goes to assisted living and qualifies for long-term care, during the elimination period, do we have to pay the service fee for that during the elimination period before that kicks in or get reimbursed?
Yes. So with your elimination period, if you moved from independent living to your assisted living and say your monthly service fee is now $5,000 and you've got a 30-day elimination period, you're going to have to pay that $5,000 first, and then after that, your long-term care insurance would pick up and cover whatever your benefit is. Any other questions? And while you brought that up, I'm going to touch on one thing, and I talk about it again at the end. So if you're a couple, you want to look at your policy and see, in this first part, you want to make sure you have a waiver of premium, whether or not you do. If you have a waiver of premium, once you open a claim and you qualify, you no longer have to pay that monthly or annual premium that you've been paying. The other thing is, a lot of times if there's a spouse situation where there's two of you, and one of you starts using the benefits, your spouse will no longer have to pay their premium. So again, that would be specified in your policy, and that's worth looking into to see if whether or not that applies to you. How do you receive your benefits? A couple different ways that you can do this. So after the month is ended, you have to send a copy of your statement, which is the bill that you get from the business office every month. And then they also reach out to the Chesapeake to have us fill out what's called a CMR, a Continued Monthly Residence Form. And basically what this form says is you have lived in the community for the entire month. You haven't gone out on any sort of hospital stay. If you have gone out on a hospital stay, they want to know the dates. If you end up in the healthcare unit, they will want to have copies of what's called a UB04. That's something that we submit to Medicare in order to get paid. So they will want all that information. And a lot of people that live in the community choose for us to do this for them. So we set it up, and I sit down the first of every month, and I print out all the bills, fill out all the paperwork, submit it electronically, and then you would get your payment within 10 to 14 business days. And there's a couple different ways you can set up payment. One, you can have the benefit paid to the Chesapeake, so the insurance company would send us a check for that month. Two, you can have it electronically deposited into your bank account. So when you fill out that original paperwork, they would provide a direct deposit form. You would fill it out with your banking information, and then once everything gets approved, payment would be directly posted into your banking account, or they will also mail you a paper check. So those are a couple different ways. Other things to consider is what I was talking about a minute ago, the waiver of premium. Does your spouse still have to pay their premium if you use your benefits? There are a couple different ways that the policies are set up. So some have a lifetime benefit, means once you've enacted the policy and you're using the benefits, it happens until something happens, or they pay until something happens to you. Some have a cap. So it could be a dollar cap. Say, for instance, it has a $300,000 policy cap on it, which means once you've collected $300,000 from the company, then that's it. The claim is over. You would no longer receive benefits. Some have a year time on them. So that means you would have a 5-year period, and after the 5 years is gone, then you no longer collect benefits. Again, that's policy specific. The other thing I recently learned is some of the policies have a hospice rider. So if you sign up for hospice, you no longer have to meet the elimination period, and you would begin to collect benefits right away. So that's something, I've seen the federal plans have that. So if you have a long-term care policy through a federal plan, a lot of those have the hospice rider, but that's worth looking into to see if that is in your policy. There are some policies that pay for home modification and or training services. So say, for instance, you're living in an independent living apartment, you are needing some help with the ADLs, but you don't want to move to assisted living yet. You want to stay in your apartment. And you need something as simple as a grab bar in the shower. Well, your policy may pay for that benefit. A lot of them will have up to $3,000 where you can use to modify your home to make it easier for you to get around. And then the training services, they do offer reimbursement for if you had a home care companion or someone that was privately taking care of you and you were paying, they could go to a course and receive additional training, and the long-term care insurance company would pay for it. The other thing that's super, 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 super important, if you don't take anything away from what I've said today, talk to your children or whoever is responsible for helping you with your finances about your policy. Make sure they know where it is. Make sure they have an idea of what it covers. If nothing else, if they have the policy number and the phone number to call, because you can walk your way through it. And also make sure they are listed as an authorized representative for the insurance company to talk to. Because if you have something as cognitive impairment and you're starting to have to use that policy, they're going to run into an issue where you have to be with them in order for them to talk on your behalf. So if you sign the paperwork on the policy and authorizing them as an individual that can speak to them, it makes it a lot easier. I know some of you have come and seen me, and anytime I have to call, you have to physically be present because they won't talk to me without your permission. And they're very strict about that. So now is a good time while we're talking about it to make sure that's something that you look into and talk to the company and make sure who can speak on your behalf. Questions?
Is it best just to bring you our policy so you can review it?
Yes, I'm willing to do that. So I fell into this because a lot of you have these policies and then you want to use them, and the companies are challenging to deal with at times. So I've learned to navigate in some of the little tricks and loopholes. So the best thing to do is, yes, you can make an appointment with me. We can sit down with your policy, take a look at it. You can see exactly what you have, what you would need to do. I'm more than happy to help look over that.
Several years ago, they doubled my premiums.
Yes.
And I said, okay, well, what do I have to do to get the coverage at a lower cost? The answer was start over.
So, and you probably couldn't buy a policy anymore at your age. Yeah. So,
I'm having a hard time hearing people from the other side.
oh, he said they offered to, what you have to say it. They raised his premium, and he didn't have another option other than to start over, which is not at y'all's age. You can't do that because they won't sell you a policy.
Pay it or lose it.
Yes. And what had happened is with modern medicine, people started to live longer, and all these policies that they sold back in the 80s and 90s that were really good policies, because I've seen a lot of y'all's policies and you have really good policies, they can't afford for all the people to use those policies. So what they've done is they've done a lot of buy downs where they'll send you an offer and say, all right, I will lower your premium in half, but you're also going to lower your benefit. And like I said, at that point, you got to look at your financial situation, see what your policy actually covers, and whether or not it makes sense to do that. Any other questions? Yes, ma'am.
Sure, did I understand that if you qualify for needing help, that they will pay, the long-term care will usually kick in your apartment?
Yes.
That care coming in?
As long as you have that home care companion service rider, it will pay for home care companion services, and you would not have to move to a higher level of care. If you didn't want to, you could have those care services in place and have home in your care. And we do have people that do that. Yes?
You said if your policy states that, you mean there are policies that won't allow you to have in-home care?
Yes, and I only mention that because, oh, okay, I'm sorry. She said, are there policies that don't allow you to have in-home care? And yes, there are some policies that are institution, meaning you have to be in an assisted living or a skilled nursing facility in order to use your benefits. But most of them have that home care rider. I just want to make sure that you know that it may not have it in your policy, so that you know when you look at it what to look for. Other questions? And I will tell you from doing these, the hardest part is getting it started. Once it gets started, it's fine. It's going and checking all the boxes of all the paperwork that they require. and making sure everything is lined up. And then once it gets lined up, it's pretty well seamless. You fill out the paperwork, send it in on a monthly basis. They turn around and send you a check. Yes.
If we call you and you look at our policy, are you allowed to put that in our record that the Chesapeake has? So let's say I wasn't cognitively able to discuss it with you, that you'd be able to tell the Chesapeake or the skilled nursing care, this is what my policy says? I mean, does it carry over in our records?
So she asked if she came and saw me and gave me a copy of her policy, would I put it in her profile so that everybody at the community would know that she had that? And the answer is yes. So each of you has an insurance profile in your in the computer system that's specific to you and what types of insurance you have. And if I know about it, it's listed on there as one of your insurance providers. But again, especially in instances of cognitive impairment, it becomes challenging because they will not talk to us if you do not give permission. So that's why I advise to make sure that someone in your family is on that policy so that they can talk to them. And that way you don't have to worry about having to be there every time.
Has anyone ever given you permission?
Yes. Yep. Yes. Yes, ma'am.
We saw on the show that between 60 and 65 is the ideal time
Yes.
to buy. Is there a cutoff elevation of age that they wouldn't even sell you a policy?
I believe it's 80. That was the last time that I checked. It could have changed before now. But even if they sold it to you, it would be exorbitantly expensive. You would be better off to put the money in the bank and use it when you need it. So, yes.
If your policy was put in your file at the time you came in to the Chesapeake, as I believe mine was, does it still need to be reviewed? How do I check to make sure it's there and everything's like it should be?
So I would recommend doing that simply because every year your benefits change.
Okay.
So some of the copies that I have are the original policies, and they're not going to have the current information on them. And it can be something as simple as bringing the letter that you get annually that lists your current benefits, and we can just put that in your file. And I'm sorry, I didn't say what she asked. She said, if you came to the community and at the time you moved in, you provided a copy of your insurance policy, is it still in your file? And the answer is yes, it would be in your file, but the information on it would not be current because most policies have an inflation rider. So that means that your benefits would rise or would increase every year, and the information that I would have would be outdated.
And are you the person that we call to find out if it's in our policy?
And yes.
In our record?
Yes, ma'am. So she asked if I was the person to contact to see if it was in your record, and the answer is yes. Other questions? And I will tell you, I would, how do I say this? Look into your policy before you want to use it and make sure you know what you have. Because I have had some residents that, like I said, their family member didn't even know they had a policy and they didn't do anything with it. And then unfortunately they passed away and never opened a claim and never collected any benefits. And there is a look back period, and I believe it's a year, meaning if something happened to you and your family was going through your paperwork and they found this policy, if it was still within a year of you passing away, they could still file a claim on your behalf and receive benefits. But it's much easier to do it at the time than it is to wait down the road. Other questions?
Do you have any good news?
Do I have any good news? Well, they do pay. So, once you do the policy and you start using your benefits, you will receive payment for whatever your benefits cover. Any other questions? She asked how long do they pay? It is specific to your policy. So you'll either have lifetime benefits, meaning they'll pay until something happens to you. Sometimes there's a year cap, so they'll pay 5 years. And then sometimes there's a dollar cap, so they'll pay up to $300,000 or whatever the number on your policy is. Yes?
What's the percentage of the people who live here have open policies right now that is being used?
So he asked what percentage of people that live here have policies that are open and are currently using them. I don't know the percentage, but I can tell you I file about 50 policies a month.
New ones?
I have 50 that month on a monthly basis. Mm-hmm.
What's the deal on hospitalization 3 days before you come here?
Oh, that is a great question. And I will repeat it. I have to take a breath before answering it. He said, what is the deal before having to have the 3-night hospitalization before you come here? And I talked about this briefly earlier with the skilled care. So when you have an accident or an incident and you go out to the hospital, in order for you to use your Medicare Part A, or if you have an Advantage plan, your Advantage plan benefits, you have to have a 3-night hospital stay, meaning you have to be at the hospital at midnight for 3 nights. If you don't have that, then you cannot use your insurance. Your insurance will not cover a skilled stay. They will cover the hospital stay and everything there, but when you come back to here, if you have to go to healthcare, they will not cover it. Your insurance will not cover it. So once you have that 3-night hospitalization and you come back to the healthcare unit, you're under what's called a skilled Medicare stay. So your payer type is Medicare Part A, Medicare Advantage, whatever your insurance company is, they're covering the cost of that stay. And that's where, when you're in healthcare, you can use that to qualify to meet your elimination period. So for instance, Medicare will cover up to 100 days in skilled nursing as long as you're improving and until you reach your baseline. So there's a baseline standard of what your normal is. And once you reach that normal, you no longer have a skillable benefit, so Medicare will no longer pay for you to stay in healthcare. And that's when you would be taking off your Medicare A stay and then go back to your apartment. However, say for instance, you're in healthcare, you've been there 60 days, and you're no longer under Part A and you need to go back to your apartment, but your normal has changed. Like you need help with bathing, you need help with dressing, you need help with those ADLs. You can use that 60 days from the Medicare skilled nursing stay to meet your elimination period. And then what you would have to do is meet that other 30 days either still in healthcare or in assisted living or in your apartment with home care companion services.
Sounds simple.
Yes. And that's why I talked earlier about with long-term care is not insurance. It's helping offset the cost of care down the road. And it's your everyday care, the getting dressed, the eating, bathing, going to the restroom, getting around. That's what long-term care is meant to cover. It's not meant to cover if you fall and break a foot or you end up in the emergency room. Other questions? And I will do another public service announcement. Now is open enrollment time for insurance companies, and Medicare Advantage is hitting like hotcakes. Buy me now. Do not sign up for an Advantage plan if you are on traditional Medicare. You are better off because where you are in the community to keep your traditional Medicare Part A with your supplemental insurance. Because there's a lot of different things around the Advantage plans, and they sound great. And they are in certain environments, but they do not work well in a retirement community. Any other questions?
I don't know exactly how to ask this, but I'm here. I have long-term that I'll review, but wasn't there a period of time that once we had Medicare, we were told to get a second policy to cover whatever the Medicare wouldn't pick up?
So
Does that pertain here or just when we were in the outside world?
it's in general. Most people have a supplemental policy because it pays for whatever Medicare doesn't. So if you have traditional Medicare Part A, a lot of people will have Anthem or Humana or Aetna. There's a bunch of different insurance companies. And what that does is, say for instance, you have therapy services. Well, Part B covers 80% of those services. Your supplemental insurance would pay the other 20%, so you don't pay anything out of pocket.
What if your supplemental is military?
TRICARE?
Yes.
TRICARE pays the co-insurance.
I didn't hear.
TRICARE pays the co-insurance. They pay what Medicare doesn't.
Thank you.
Any other questions? Yes, ma'am.
It seems to me it would be useful if those of us who have a given policy by a given, let's say Aetna, could meet with you and learn more about our policy.
So she said that it would be helpful if you had a different type of policy that you could meet with me and talk about it. I'm happy to do that. I will preface it with saying I know a lot about insurance. I'm not an insurance professional. So I would be happy to sit down with you, look at the policy, give you an idea of what your benefits are, even call the company if we need to. But again, I don't sell insurance. I'm self-taught on most of this stuff. I've learned the hard way on a lot of it because I bill it. And so you learn what to and not to do. So like I said, I'd be more than happy to do that. But I do want to say I am not an insurance professional. Any other questions? All right. Well, if not, I will let you guys go. Oh, yes, Mr. Sayer. I charge to file it. So if I file your insurance for you, yes, the community does charge for that. The other stuff I do to help the community. So I know I've gotten into this, like I said, learning the hard way, what to and not to do. And so I'm familiar with most companies and how they work and what you have to do in order to file a claim. So I'm more than happy to help you navigate that. The only thing that I charge for is actually filing the claim itself. And I will say, it's the end of the month, so please don't all hit me next week with wanting to see me, because I do have the other stuff I have to do for the community, and it's billing time, and the rate letters are going out next week. So if you could give me a little grace and breathing room, I'd be happy to meet with you, but do keep in mind that next week is a super busy week for me. Anything else? Well, if not, enjoy the rest of your weekend. Thanks for coming.